Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi. I am the tax director here at Press Cooper. Today I've been joined by my colleague Mahar Afzal, and together we will be taking you through today's webinar. So the topic of today's webinar is Corporate Tax Return Guide. So Corporate Tax Return Guide has been introduced by FTA. It came out in November. So we've already done one webinar on the corporate tax return. I think 2 months back when the EmaraTax portal, we could see that the corporate tax return form was available there for a lot of companies, for example, whose year end has already passed, for example, June, September. So the corporate tax return form is available for those companies, and it was available on the portal. So we had done a very extensive webinar on this topic. So if you missed that webinar, it's available on our YouTube channel. Our handle is Chris Cooper, and you can go and visit and review this webinar. It is giving you an overview of the form. Now, this guide that has come out now is explaining that form in a lot more detail, and it is giving has given more information and more added more schedules to the different sections, so that taxpayers can fill the information. So all that is available in this guide. Now this guide is very comprehensive, so you will see that there are a lot of portions of this guide. It is too long for us to cover it in one day, so we will be splitting this guide and discussing it in detail so we don't miss anything. What we will do is, like I said, we've already done this webinar before and given you an overview. So I will take you through some of the portions of the return, and then Mahar will take you to the guide and try to connect it with this overview that I will give you, so that you have the in-depth view of the guide as well as an overview of those sections. So if you look at the guide, it has a glossary introduction like other guides. Then it starts with an overview of a tax return. The taxable person detail is there. Elections are there that are needed to be made for various different cases in the tax return. Then we have the accounting schedules, accounting adjustments and exempt income section, adjustments, tax liability and tax credit, then review and declaration. Now, till here, this is kind of where the tax return will end. But like you see that there are a lot of different more portions in this guide, because it is relating to specific schedules which are part of these portions in the return. Wherever you're filling the return and it is applicable to you, it will pop up there, the schedules. In the guide, they have given the schedules in the end, so that if it is applicable to you, you can look at it. So for example, for the free zone person, there are some schedules to be filled there. If you are receiving any dividend from resident person or non-resident juridical person, then you have to fill some schedules. For foreign permanent establishment, schedules are there. For tax availing any tax credit, there's a schedule there. Then if you're having any adjustments that are required to be made for related party transaction or connected person, to bring them to arm's length, that those schedules are there. Some of the schedules are reporting kind, where you need to give the information for FTA to retain as part of the tax return, or some of them are asking you for amounts and information there, which is used in the calculation. So we have the tax loss schedule, we have the participation exemption schedule, interest capping schedules. Again, like I said, that they will be popping up in the return in the portion where they are applicable to you, but in the guide they have been given in the end. There is a tax relief schedule, transitional rule schedule, some other schedule, and some information about the exempt person. So today we will be covering what I have bolded here in the glossary, in the topics. So we will be taking you from the introduction and taking you all the way to the accounting adjustment and exempt income. And then we will continue from that to in our next week's session. So what is a corporate tax return? So a corporate tax return has been defined as information filed with the authority for corporate tax purposes in the form and manner as prescribed by the authority, including any schedule or attachment thereto or any amendment thereof. So now this form and manner has been given in the EmaraTax portal, is given in the guide, that this form has to be filled. What is the manner to be filled is given in the guide. And also while you're filling the form on the EmaraTax portal, some instructions have been given there as well. So we know that companies required to file this corporate tax return on the EmaraTax portal. We know that the return has to be filed within 9 months from the end of the tax period, and we have to settle any corporate tax payable also within the 9 months from the end of the relevant tax period. So if you look at the EmaraTax portal, like we said that, where do we have to fill this form? It has to be filled in the EmaraTax portal. If you are already registered for corporate tax, then only you will be able to see this form. So once you are registered for corporate tax, you can go to the corporate tax portion. There you will see the corporate tax filings, and inside the filings, you will be able to see the corporate tax return. Like we said, that it will only be applicable for those people whose tax year have already ended, like for example, for June year end or for September year end, like people whose tax year is still not ended, for example, like December year end, you will not be able to see this return at the moment. As soon as December 31st will cross, you will be able to also see this return. So this is the place where you need to fill this return. So as soon as your financials are, completed and audited, if the requirement is there for you, then you can fill this form. You do not have to wait for the 9 months. So if you look at the corporate tax return itself, so there are eight portions. It starts out with the taxable person information. Then elections are there that needs to be made in the return. Some of them are, elections that are required in the first return, then they will not be repeated again in the subsequent returns. Some of them you will need to make in each return as applicable. Then we have the accounting schedule. This is the information that is coming out, flowing from the from your financial statements, the balance sheet, the income statement, and other schedules. Then we have the accounting adjustments and exempt income. So there where we take the accounting profit and then we start doing the adjustments as per the corporate tax requirements, and we are excluding the exempt income. Then we come to the reliefs where various reliefs are available. For example, the qualifying business relief or the business restructuring relief. So if the reliefs are applicable to you, then this is the portion where we have to fill that. Then other adjustments that are required in the corporate tax law 2, the accounting profits are made in F, and then we are calculating the tax liability, and also any tax credit is availed if it's applicable to the company. And then the last, we review the return and we declare it. So today, like we discussed, we will be taking you from A to D for the overview and also in the guide itself. And then we will continue with E, F, G, H, and the various schedules that are there in the guide itself in our subsequent tax webinars. Now, the first question is taxpayer details. Now, this, like I said, that only if you are registered for corporate tax can you file a return. And while you were registering for corporate tax, you have already given all this information. This information is flowing through from your registration, like the name, entity type, address, contact number, email ID. All this information is what you have filled in when you were filing the corporate tax return. Now, note that this information is very important because when we are looking at the guide, you will see a lot of questions that are not applicable to you. So they will not appear in your corporate tax return. So for a company, how the corporate tax return will get tailored, first of all, first and foremost will be what you have chosen in your corporate tax return, what type of entity you have chosen yourself to be, the legal type, the business activities, and so on. So it will be get tailor-made because of those taxpayer details. So it could be that if you have not chosen this correctly, then the right questions are not popping up in the return, and they have given you this option to amend this. So first you need to amend this if any of the information flowing from the corporate tax registration is incorrect. And we know as well that we need to keep our profile in the EmaraTax portal up to date. Otherwise, FTA will impose a fine. That lately they have given a grace period till March 31st to let the taxpayers update their return without any penalty. So we would recommend that if this information is not up to date, that you should make it up to date now, since there is no penalty involved at the moment, and also before the return this is completed, because FTA will be the one giving the approval, and there will be delays otherwise at the time of filing the return if you leave it too late. Now, in the taxpayer detail, there'll be certain questions based on if you're a natural person or a juridical person. Example, if you're a natural person, it will ask you certain questions. So, for example, the first question it will ask you is the taxable person a partner in one or more unincorporated partnerships. So, what is unincorporated partnerships? We know Unincorporated partnership established by a contract between two or more persons to carry out a project or a business, to share in the profit and loss, of that project, of that business. It is a fiscally transparent entity, meaning that the partners are the ones who will be taxable, not the partnership itself. So what it is requiring you to the natural person to tell is that if you are part or a partner in any of the unincorporated partnership, so you will choose yes or no. If you choose yes, it will ask you to put in the TRN of all the unincorporated partnership because they are also liable to be registered. Then it is asking what is the person's turnover from business and business activity conducted in the UAE. Now, we know that for natural person, uh, only if their turnover is exceeding 1 million are they required, or they will be required to register for corporate tax, and corporate tax will be applicable on them. So here they're asking you to put the amount of turnover. So then the relevant questions will pop up. For example, if you enter the turnover as less than 1 million, then the return will be modified, and they will not ask you further questions or ask you to fill the full return. If you have already registered, that is, because see, there can be a case where you have registered in one, in the start because you were meeting this condition, but in the next say might be that you are not meeting the turnover, but you do not have to deregister. The registration will stay there. Only you will fill this question if you are if your turnover is less or more than 1 million, and automatically the return will get modified. We know that in the turnover we exclude wages, any rental, investment income, or any personal investment income. So apart from that, if the turnover is exceeding 1 million in the Gregorian calendar year, which is Jan to December for the natural person, then only they will be required to register for corporate tax and also file the return. So this amount needs to be put here. Then the next question is, has the taxable person financial statement been prepared under the cash or accrual basis? So under the corporate tax law, if the turnover of a person is, under 3 million, so they have the option that they can either go for the cash basis or for the accrual basis for accounting, for preparing the financial statement. So if you have entered, an amount in the preceding question, which is less than 3 million, only then this question will pop up. If, for example, you've entered the amount of turnover as 4 million or 5 million, this question will not pop up for you. So like I said, that in the form itself, there are certain questions that would make your return have a particular set of questions or not based on your answers, and some particular set of questions are there based on the registration criteria that you have filled. So both of this is important of what you are populating. Now, then the next question it will ask is, does the taxable person conduct more than one business or business activity? This again is coming from registration. If you have chosen more than one business activity, it will get pre-populated here from there itself. How many business or business activity does the taxable person conduct? Again, it will get pre-populated list of all the business and business activity as per the registration data. Again, it is pre-populated. So like we said earlier, that it is very important for your registration detail to be accurate because all this is getting pre-populated. Then it is asking you to estimate the percentage of the total revenue attributable to each business sector in which it operates. So you've already selected the business activities. Now you need to put a percentage of how much of your revenue is coming from which activity, and the total of this should be 100%. Then only when you put the amount and it is percentage and it is 100%, it will let you move on. The next question it is asking is the taxable person a resident or a non-resident person for UAE corporate tax purposes. So either you have to select resident or non-resident. Now, if you are a natural person and you're conducting any activity in the UAE, wherever you are residing, if you're residing in the UAE, then you are a resident. If you're residing outside of the UAE and there's no double tax treaty with the country, you are a resident for UAE. If there is a double tax treaty, you have to look under the double tax treaty that, are you a resident or a non-resident, then answer this question. They could be maybe, you're meeting the condition of a resident of another jurisdiction based on the double tax treaty, then you will be a non-resident. And then if you are a non-resident, it will ask you to select the country in which the taxable person resident for the tax purpose under the relevant double tax treaty. So it is asking for the country of residence from the drop-down menu. Now, for juridical person, there's also the similar set of questions, but also they are different. To a natural person, for example, it will be asking you, is the taxable person a member of a multinational enterprise group? Now, what is a multinational enterprise group? Multinational enterprise group is a group where, has two or more companies who are, established in different jurisdictions. So one might be in UAE, one might be in India, one might be in USA. So it has to be in located in different jurisdictions. And the total consolidated group revenue has to be equal to or more than 83.15 billion during the financial year preceding the current tax year. So if that is the case, you're meeting the definition of multinational enterprise group, you need to do, mark it yes over here. There are certain things which are not available to the multinational enterprise group companies who are part of that. So, for example, small business relief. So that is why they're asking you this question, and you have to mark it appropriately over here. Again, it will ask you if the taxable person is a partner in one or more unincorporated partnership, like we discussed. If the answer is yes, it will ask you to put in all the TRNs. Is the tax return being completed by a government entity, government controlled entity, extractive business, or non-extractive natural resource business? We discussed in last week's webinar as well that these are the people who are exempt persons who get the automatic exemption if a government entity is doing a sovereign business, government controlled entity, they are doing mandated activities, extractive business or non-extractive natural resource business, if you are conducting that and you've notified the ministry you are exempt from corporate tax. So, but if you have any other business activity apart from this, for example, sovereign activity or mandated activity or the extractive business or non-extractive natural resource business, and you're conducting that, then you have to mark this. When you will mark this as yes, it will ask you to provide this further information that is there any other business activity, because then it will make you fill the return for those business activities which are not part of the exempt activity. You can say, like we said, that for government entity it is the sovereign business, for government control entity it is the mandated business if they are doing that, and extractive business or non-extractive natural resource business. So any business apart from this which these entities are doing, they will have to fill the normal return form. So you will have to mark it yes here, and more questions will come. If you mark it no, then further questions will not be applicable on you, and your return will not have this question visible. The next is, what is the taxable person revenue during the tax period? Here we have to, enter the amount of turnover. Again, this will tie, in later on with some reliefs. For example, small business relief, it's available inside a particular, amount. For example, and if the amount is up to 3 million. So if you have already put in the revenue here, which is more than 3 million, that question will not pop up for you. If you have put in an amount which is less than 3 million, then that question will come to you later on in the elections, and for you to answer it appropriately. Has the taxable person financial statement been prepared under the cash or accrual basis? We discussed that if your turnover is again 3 million, this question will pop up. If not, then this question will not arise. If it is less than 3 million, then you have the option to either go for the cash basis or the accrual basis, then you will fill this question accordingly. Does the taxable person conduct more than one business or business activity? How many business or business activity does the taxable person conduct? List of all business and business activity as per registration data. So like we discussed for natural person, this all is flowing through from your registration, and it's already pre-populated here. Again, if any of this information is incorrect in your registration, you need to correct that so that this information is properly filled here. Again, it will ask you for the percentage of the different business activities, and that percentage should match at 100%, so that all the business activities are covered as per the registration detail. Is the taxable person incorporated or otherwise established or recognized under the laws of the UAE or under the laws of the free zone? Again, this is pre-populated because this you would have selected in the registration itself. And when you're choosing the trade license issuing authority and other information, it will get pre-populated from there. Is the taxable person tax resident in a foreign jurisdiction under the applicable double taxation agreement? So this answer has to be yes or no. Again, like we discussed, that if there is no double tax agreement and you're a resident for UAE, then you will do no. If there is a double taxation agreement, depends on which country is the foreign jurisdiction and what is there in the double taxation agreement. And for example, some of the double taxation agreement have the tiebreaker rule. So if you are a resident of both the countries, this tiebreaker rule will be applicable, and depends on that in the end, in the tiebreaker rule, if you are the resident of UAE or of the other foreign jurisdiction. So you have to mark this correctly for that. If you mark it as yes, then it will ask you which country is the taxable person resident for tax purposes under the relevant double taxation. So is the taxable person a non-resident person? So you have to also decide this. Now this is flowing through from the earlier question as well, that are you a resident of UAE or not? So if you are a non-resident person, like we discussed, you have to click that, and then it will ask you is the taxable person incorporated or otherwise established or recognized under the laws of foreign jurisdiction, but effectively managed and controlled in the UAE. So this is where the place of effective management, rule will come in. So if even if the entity is, a non-resident person, but they are being effectively managed and controlled from the UAE, then you will have to mark it as yes. And then again, this answer to these questions will determine what the rest of your form will look like, and will you be considered resident here in the UAE or not. Is the taxable person resident in a foreign jurisdiction under the applicable double taxation agreement? Like we discussed, if when that particular double taxation agreement, you are falling as a taxable person in the foreign jurisdiction, you have to mark this, or you have, under the tiebreaker rule, you are a resident of that jurisdiction, you have to mark yes. In which country is the taxable person resident for tax purposes under the applicable double taxation agreement? You have to select the country of residence. It will ask you in which country is the taxable person incorporated or otherwise established. This will be flowing through from your registration, which will be marked there. And then it will be asking you to select the basis of why the non-resident person has to file this tax return. Is it because you have a P in the UAE, or it is because of the having a nexus in the UAE? So this basis will need to be selected as well. Now, if you are a free zone person, there would be certain schedules like we discussed that you have to fill. Those schedules we will be discussing later on in our webinars as well. But here, there will be some extra questions. If you are a free zone person, it will ask you that, if you are established or registered in a free zone, again, this will be flowing through from the registration because you would have already filled the licensing issuing authority over there. They will ask you if you are making an election to be subject to corporate tax, and if you're meeting all the conditions. Now, what are all the conditions? We know that a free zone person has to meet certain conditions if they want to be treated as a qualifying free zone person. Those conditions are they first need to be driving qualifying income from relevant transactions. What are the qualifying income? So if you're doing transactions with free zone person, there has to be two beneficial recipient. It can't be one of the excluded activity. If you're doing transaction with, for example, non-free zone person, it has to be one of the qualifying activities. It has to meet the conditions of the qualifying activity. It cannot be part of the excluded activity. And we have to maintain the de minimis requirement, which is 5% or 5 million, whichever is lower, 5% of revenue, or 5 million, whichever is lower. So we have to maintain that as well. We have to not elect to be subject to the normal corporate tax regime. We have to comply with the transfer pricing rules and documentations. You have to prepare and maintain audited financial statement for the purpose of corporate tax. So if you're meeting all this condition, then only you will be clicking yes, choosing yes, otherwise no. Now we know that this is return is like a self-assessment, just like VAT. So we will have to make this, requirements or these conditions. We have to evaluate ourselves and then choose appropriately. And this election, if you make this election, then again it will be irrevocable for you. So you have to make the election that if you want to be part of the normal tax regime, or you're electing out. So this has to be filled for qualifying free zone person. So now this was the taxpayer detail that they have gathered about what kind of person. There will be few more details if there's a tax group, or more which is not mentioned here, but which Mahar, when he's going through the guide, he can take you along some and highlight some of those points as well. But we will move on to the next section, which is the election. So like we said, that there are certain elections which needs to be made when we are filling this corporate tax return. Now, when we are filling this corporate tax return, there will be some elections which will be there just for the first return because they are revocable. They will be applicable to all future returns. And then there will be certain elections which you will need to make in every return. So every year when the return comes, those elections will pop up in this section. The other election which you have made in the first return, they will be pre-populated. They will be then grayed out, and you will not be able to amend it. Only if you apply to FTA and under special circumstances, you might get to change your election basis. Otherwise, they will be what it is in the first return. So the elections here, what we will be discussing, which will be popping up in your first return, will be the gain and loss on realization basis, the transitional rules, the small business relief, the transfer within the qualifying group, um, their business structuring relief, the foreign permanent establishment exemption. So let's discuss each one of these in detail. So now businesses that are preparing the financial statement using the accrual basis of accounting. This is not applicable for those who are doing the cash basis of accounting, only for those who are doing the accrual basis of accounting. So they will have an option to elect that if they want to account for the gain and losses on realization basis or leave it on unrealized basis. So this is just, you have to make it in the first return. You cannot make this selection again, only in exceptional circumstances, like I said. So this election can either be made in relation to all the assets and liabilities that are subject to the fair value or impairment accounting under the applicable IAS, whichever you're following. So if, for example, your revenue is more than 50 million, you have to follow the IFRS. If it is less than 50 million, you can go for IFRS for SME as well. So whatever applicable accounting standard there is, it is that you have to select that either you are making it in relation to all assets and liabilities that are subject to the fair value impairment accounting, or for assets that are held on capital account only. So this will be required to be made. So when you are going to this section, it will ask you that would the taxable person like to elect to use the realization basis. If you will click this as yes, it will further ask you that are you a bank or insurance provider. Now, if you are a bank or insurance provider, or you are tax, part of a tax group, and one of the companies is a bank or insurance provider, and you have to click it yes, then only applicable option for you will be two, which is all assets and liability held on capital account at the end of a tax period. If you're not a bank or insurance provider, it will give you these two options, that would you like to elect the realization basis for all assets and liability that are subject to fair value impairment accounting, or for all assets and liability held on capital account at the end of the tax period. So this election you need to make in the first tax period, like we said, that it will be irrevocable. So this is something the companies have to, think about, that what is more beneficial for them, and look at their cash flows, and see that if unrealized basis would be more suitable or realized basis would be more suitable for them. Then we have an election for transitional rule. So again, this election is not applicable for those who have selected the cash basis of accounting. It is an election to adjust the taxable income for any gains that are recognized on qualifying immovable property, qualifying intangible assets, and all qualifying financial assets and liability which were owned prior to the first tax period and have been recorded on the historical cost basis. Again, this will be submitted in the first return. It will be a revocable election. Only under special circumstances would you will get this FTA approval to change your election. Otherwise, you will have to do this election. So it will ask you separately that if the election is being made to adjust the gains recognized on qualifying immovable property owned prior to the first year. It will ask you separately for qualifying financial asset and liabilities. It will ask you separately for qualifying intangible asset. So you have to make the election for all three of them separately, and it will be applicable on that particular class of asset, for the subsequent returns as well. Now, if a tax group is selecting this election, then how it will work is that if this is the first tax period, it's the first year for the tax group, and nobody has made any election, then the tax group can make this election. That if they want to go for this transitional relief or not. But if any of the member, for example, has in the first tax period made the election and then joined the tax group, and then formed the tax group, so then whatever election it has made, it will be applicable to the whole of the tax group as well. So now in the first one, where the tax group is making the application, if, for example, the tax group ceases or to exist or any member leaves, that election will still be applicable to them, and it will get pre-populated in the subsequent year for the member as well, even if when they are not part of the tax group. Still in their return, these elections will be grayed out. They will already be considered as elected by them. And in B, where where the member had chosen before being part of the tax group. So again, whatever they have chosen, it will be the same election for the tax group and for them even after, and on all the members even after the tax group has ceased. Then the next selection we have the small business relief. So like I said that, in the start, in the taxpayer details section, they were asking what is the turnover for the business. So this is why it is, relevant, because here in the small business relief, it will only show you this relief if your turnover, what you have declared, is less than 3 million. So now this relief is applicable if the revenue that you have is less than 3 million in the relevant tax year, which is the current tax year, and all previous tax period. Now, there is no previous tax period in this first return, but in the subsequent return, for example, when you're filing the return for tax year 2025, this turnover should be less than 3 million in tax year 2024 as well. Then only you will be, eligible to have this relief. And if that is the case, then it will be showing you these questions and asking you to select if you want to be, take this relief. Again, this relief is only available at the moment till 31st December 2026. We don't know if maybe FT will extend this for a shorter period of time as well, or it will, end it at 31st December 26, but this is where it is available till now. So once, if you select this, if you see that, it is also correlating it to the question we answered before about the multinational enterprise group, that if you are part of the multinational enterprise group, you cannot have a small business relief. So it is again, taking this question from what we answered in the previous section, and it will not, give you the small business relief if you have answered this at the end. Since, we've answered it as no, it is, popping up this question here. So it will give you this option that do you want to, file for the small business relief. Now, if you chose the small business relief, because if you're choosing the small business relief, then there'll be no, taxable income in that period, and you don't have to fill the full return. The return here will kind of become a short return. It will not ask you for any more questions, just, the basic questions that we went through in the first portion, and the elections will stop over here, and no more information will be required from the taxpayer for this tax year where this small business relief has been clicked as yes. The next selection that we have is transfer within a qualifying group. Taxable person will be treated as a member of a qualifying group. They have to meet certain conditions. What are those conditions? Taxable person are juridical person who are also resident persons, or they can be non-resident person that have a PE in the UAE. So they both have to have this ownership relationship, which is that either the taxable person has a direct or indirect ownership of at least 75 in the other taxable person, or a third person can have direct or indirect ownership interest of at least 75% in both the taxable person, or more if they are more than two. And none of the person can be exempt person or qualifying fee zone person. The financial year of each of the taxable persons should end on the same date, and both taxable persons should prepare the financial statement using the same accounting standard. So if you are meeting this condition to be part of the same qualifying group, so if you do make an election to apply, then what will happen is that all the assets and liability which are held on capital account that have been transferred between the members of the qualifying group during the year, if any, they will be treated as to be transferred at book value. And there will be no gain or loss arising from this transaction. So the amount which is paid or received by the transfer will be treated as being equal to the value at which the transfer records the transferred asset or liability. And this election, like we said, will be made along with the return here in this election portion. This election is also irrevocable, and it will apply to all future transfers of assets and liabilities which are held on capital account by the transfer within the qualifying group for all future periods. So if you see the question, it will ask you that does the taxable person transfer any assets or liabilities to a member during the tax period? So this you will have to answer yes or no if such kind of a transaction occurred during this current tax period, and then do you elect for the relief for transfer within the qualifying group. The next selection which we have is business restructuring relief. So again, there could be circumstances where either one company which is part of the same group, they might be selling the entire business or independent part of the business to another company in the group in exchange of shares, ownership interest. Business restructuring might be happening. So this business restructuring relief is available to the group where they may apply to eliminate the corporate tax impact of these transactions, because ultimately they're part of the same group. Under this relief, no gain or losses will be taken into account. and it is a tax neutral transaction when we are calculating the taxable income of either of the party. But for there are certain conditions that need to be met for this, relief to be applicable on you. What are those conditions? The transfer has to be undertaken in accordance with and meet all the conditions imposed by the applicable legislation of the UAE. The taxable person have to be resident person or non-resident person that have a permanent establishment in the UAE. None of the person are exempt person or qualifying fee zone person. Financial year of each of the taxable person ends on the same date. The taxable person prepare their financial statement using the same accounting standard, and the transfer is undertaken for valid commercial reason, which reflects the economic reality. So if you are meeting all these conditions, then these questions are there to be answered. Did the taxable person transfer a business or independent part of the business during the tax period under which business restriction relief may apply? So if such a transaction has happened during the tax year, for example, during tax year 2024, you will mark it yes, otherwise no. And then it is asking you to make this election if you would like to go for the relief or not. Then under the elections, we have the last election, which is for foreign permanent establishment income. So only if you have a foreign permanent establishment, resident person has a foreign permanent establishment, then, just to reduce the potential international double taxation, what they are asking is that if you want, because you're already going to be taxed in that foreign jurisdiction as well, you can make an election to have the income and expenses excluded, from your income and expenses for UAE corporate tax purposes, and to have this exemption. But if this exemption is taken, then it will be applicable to all the foreign permanent establishments. You cannot choose this exemption for one foreign permanent establishment, let's suppose located in India, and then choose a different election and have the income and expenses of, let's suppose, China included. No, it has to apply to all foreign permanent establishment of of the resident person. So they can make this election if they don't want to include the income and expenses of that, because that for resident person, the worldwide income is taxable here in the UAE, but this exemption is given just to for administrative ease if you want to exclude all the foreign permanent establishment from this. Otherwise, you can take a foreign tax credit for these different taxes paid in the foreign jurisdiction, but this exemption is also available. Then moving on to the next section, we have already done the taxpayer detail, we have done the election, so then it will bring you to accounting schedules. So now, for accounting schedule, we discussed like if you have the turnover of 50 million or more, then you have to use the IFRS basis for the accounting. You have to get your financial statement audited. If it is less than 50 million, you can go for IFRS for SME. You do not have to have the financial statement audited. You can if you wish, but it is non-mandated in the law. If your turnover is less than 3 million, it can be on cash basis as well. And if you're a qualifying fee zone person, doesn't matter what your turnover is, you need to have your audited financial statement. So this section here is kind of a reporting section where it is not calculating anything under the law, but it is just taking the financials or the information in the books of account, and it is mapping it here, because we know that a starting point for any tax calculation will be the net profit or loss as per the accounting financial statement. So that is why it is requiring all this information in these accounting schedules. So if you see the first schedule it is asking for is the statement of profit and loss, and it has given some line items which need to be filled independently, whereas the others can be clubbed together. So for example, it is asking for operating revenue, expenditure incurred in driving operating revenue to take out the gross profit, then salary, wages and related charges, depreciation, amortization, interest income, interest expenditure, then gain on disposal of asset, losses on disposal of asset, foreign exchange gains, foreign exchange losses, fines and penalties, donation, client entertainment expense, other non-operating revenue, dividend received. So like I discussed, some of these line items are specifically asked for. So if there is any donation, fines or penalty, any entertainment expense related to client, not employees. So those they want you to put it here specifically. The others you can club together, whatever is in your P&L, the other will go to other expenses or other non-operating revenue, but whatever else is there in the line item need to be put separately. Then we have statement of other comprehensive income. Again, it is asking this for reporting purposes, asking you to fill it from your financial statements. So income that will not be reclassified to income statement, losses that will not be reclassified to income statement, income that may be reclassified to income statement, losses that may be reclassified to income statement, other income reported in other comprehensive income for the year, net of tax, other losses reported in other comprehensive income for the year, net of tax. So this information, it is requiring you to fill here in the statement of other comprehensive income. Then we have statement of financial position, which is a balance sheet. So if you see, this is a little concise version where they're asking you, for example, for current assets, they're not asking any details. They're asking you to put in the total amount. For non-current assets, they are asking for some line items, separately, like property, plant, and equipment, intangible assets, financial assets. The others, they are asking you to club together. For liabilities, again, they're not asking for the breakup. So you can put in the total current liabilities, the total non-current liabilities. For equity, they're asking for the share capital breakup, the retained earning breakup. The rest you can put in other equity. And this should be balanced out, and the assets and liabilities should be matching. They are also requiring the information about total number of employees in the company, together with this statement of financial position. So like I said that, certain entities are required to have the accounts audited, those whose revenue are exceeding 50 million or qualifying fee zone persons. So they have to fill in this section. Again, this is like a reporting section where you're just filling in the information. So they're asking if the financial statement have been audited or not. What was the audit opinion? Was it qualified, unqualified, disclaimer, or adverse? What is the name of the auditors who did this audit for you? And if you have the corporate tax TRN of that auditor as well, if it is information is available to you. Then lastly, in the accounting schedule, it is asking you for the capital distribution schedule. Here it is just taking the information about the shareholder. You have to add this information for each shareholder of the company. So if the company has 3 shareholders, you will need to add it 3 times. You have to add the shareholder's name. You have to put in their corporate tax TRN if they have been, separately registered, and if corporate tax is applicable for them, you have to put in the Emirates ID, the passport number, the capital at the start of the tax period, the number of shares at the start of the tax period, ownership percentage at the start of the tax period, capital contribution made during the tax period, distribution received during the period, nature of the distribution, remaining capital at the end of the tax period, number of shares at the end of the tax period, percentage ownership at the end of the tax period. It is basically taking the information about the shareholder, about what was the ownership at the start of the year, at the end of the year, what distributions were received, and this will probably repopulate it again next year in your return, and you can make some amendments if the percentage have changed during the year or not through the schedule as well. So moving on to our last portion that we will be discussing today, which is the accounting adjustment and exempt income. So like we said, that the basis of starting the accounting adjustment is the net profit and loss, and now you have populated your whole financial or books of account in the reporting section for the accounting schedule. So now it will ask you some relevant questions. So the first question it will ask you is, has the taxable person realized any capital gain or lossing during the tax period? Does the taxable person account for any investment under the equity method of accounting? So we know that under the equity method of accounting, an investor normally records the dividend received as a deduction in the carrying value of the investment and its share of an investment earning in its income statement. And these amount has to be disregarded when we are determining the taxable income, and it requires an adjustment to the net profit. That is why it is asking you to put in the share of profit relating to the investment which is accounted under the equity method, and also to put in the share of the losses so that it can be excluded. Now it is saying that, has a taxable person derived any accounting net profit or accounting net loss from unincorporated partnership that are treated as separate taxable person? We discussed in the start of this webinar that the unincorporated partnerships are not treated as separate taxable person, but they are fiscally transparent, and the partners are the ones who are, taxed, but they can apply to FTA to be treated as a separate taxable person. So here they are asking that if such an application has been made and you're driving from such an unincorporated partnership, which are treated as separate taxable persons. So you will have to mark it yes or no. And if you have marked it as yes, then it will ask you again to exclude, this income from this, financials of yours. If that unincorporated partnership is being treated now as a separate taxable person, you will need to put in this figure so that it can be excluded from the accounting profit, which is the accounting net profit derived from the incorporated partnership, net losses derived from the incorporated partnership, any gain on transfer, sale, or other disposal of an interest in an incorporated partnership, which meets the condition of participation exemption, losses on transfer, sale, or other disposal of an interest in the unincorporated partnership which meet the condition of participation exception. So only if there is such a unincorporated partnership which is now treated as a taxable person will you need to exclude these amounts. So now when we are calculating taxable income, taxable person will also be required to adjust their accounting income to include any realized or unrealized gain or losses that are reported in the financial statement, insofar as they would not be subsequently recognized in the statement of income. When can this case be? Like, for instance, if a gain or loss is recorded in the statement of other comprehensive income, but it will not be subsequently included or reclassified to income statement in future periods. So then you will have to answer this question appropriately and put in the figures for that. Now, the transitional adjustment, like we discussed already, that we've made the election. So first, it will ask you for this tax period, were there any taxable, if taxable person held any in their financial or in their books, any qualifying immovable property or qualifying intangible asset or qualifying financial asset or financial liabilities during the period. If you mark it as yes, then it will ask you separately for all three categories that has taxable person disposed of any qualifying immovable property during the tax period. If it has, then you will have to put in the amount for the adjustment. Has the taxable person disposed of any qualifying intangible asset during this current tax period? If the answer is yes, again, the adjustment have to be made prior that, for those qualifying intangible asset that were owned prior to the first tax period. And then again, separately for qualifying financial assets and liabilities, this information will again have to be given, that if we have disposed of in this tax period any of the qualifying financial assets or financial liabilities. And if the answer is yes, we do need to give in the value of the adjustments, of the gains, of the losses, and all of our both financial assets and liability which were owned prior to the first tax period. Then exempt income, we know certain income is exempt, so it has to be excluded, from our accounting income. For example, dividend income, which is received from UAE resident person, it has no conditions, it is exempt. So if you have received any dividend from any resident juridical person, then you will have to click it as yes, and you have to put in that amount so it can be excluded. If you have received dividend or other profit distribution from foreign juridical person, then they are also exempt, but certain conditions need to be met for participation interest. For example, like the ownership should be at least 5%, or the shares should be held, or at least intended to be held for a period of 12 months in certain under conditions. If you are meeting that, and the definition for participation interest, and you have derived any income from that, so you have to click yes here, and then give the more detail about it, and what is the amount of income, what the amount of losses, or for the next tax return it will be for the previous period, if there was any participation exemption which you had taken, but it no longer meets the condition, so that need to be added back as well. And if any losses were previously exempted, that also you will have to put in this information. Then we have the foreign permanent establishment exemption. So this part again is applicable to natural person, juridical person, or resident person. Like we said, if there's a foreign permanent establishment for these people, and they want to exclude the income and expenses for all the permanent establishment, then this portion will be relevant to them, and they can click it as yes, or if their income was received from this portion. So that is it from my side, and I think now I will hand it over to Mahar, who will just quickly take you through the guide, which basically has essentially the same thing, but he will just show you how it is mapped in the guide itself, so that once you are looking at the guide, it will be easier for you to relate to all the information that I have given you. So Mahar, over to you.
Well, thank you very much, Faiza, and I really appreciate it. Very well presentation. It was guide, the combination of the guide along with this PowerPoint, and we have taken the question from the FTA portal as well. I believe it will be helpful for everyone. Now we are discussing about the guide. So before going through the guide, this is very important to update you that each and every question that we're discussing today, that is very important because it has been given on the FTA portal, and every question has a logic. Whenever you are addressing those questions, you need to make sure you are addressing those questions very accurately, because based upon those questions, your taxable profits will be calculated. And based upon those questions, your tax liability will be ascertained. Each of those questions is principally the application of the corporate tax law. Unless and until you don't have any grip on the law, I didn't think so you will be able to understand the logic of each question and what will be the impact of each questions on your return. So as I mentioned, we are going through the guide today, and most of the thing, as Faiza has mentioned, but I will be going through the very important aspects of the guide. Well, so introduction, I'm passing it on. Purpose of the guide is basically you will be able to calculate and prepare your corporate tax return, which is quite obvious. Overview, this is a self-assessment. This is your ownership. You will be required to prepare the return. It will be your ownership, your owners, and you will be liable whatever the information you are putting, like the VAT return. As usual, you will be put on. It will be return will be submitted on the FTA portal through online portal. These are the major sections out of this A to D we have already discussed in detail, but important thing, taxable information. Taxable information will be auto-populated. A lot of information will be auto-populated, but you need to assess what is your status exactly. You are a juridical person, you are a natural person, you are a juridical resident person, juridical non-resident person, qualifying free zone person. Now, if you are not a qualifying free zone person, then treatment will be different. Like I just wanted to highlight, by default, every free zone person is a qualifying free zone person. I'm repeating, by default, every person is a qualifying free zone person. If you are not a qualifying free zone person, then you will have to elect, you will opt it that you are not want to become a qualifying free zone person. And if you are becoming a non-qualifying free zone person, you are not a qualifying free zone person in the current tax period and next 4 tax periods, you will not be able to become a qualifying free zone person. You need to be careful in case you wanted to opt it that you wanted to become a taxable instead of a qualifying free zone person. But by default, you will be a qualifying free zone person. That is important. Here, exempt person, if the exempt person are conducting any commercial activity, they will be liable to submit the return as well. By default, some exempt persons are by default exempt from the corporate tax. Some are exempt, but they need to register, then they need to apply for exemption. The person is by default exempt a government entity, government controlled entity, but if they are doing any commercial activity, they will be liable to submit the return. This is the reason they have included the exempt person here as well. Unincorporated partnership, by default, unincorporated partnership is not subject to corporate tax, but they can opt to be subject to tax like a free zone person. Their free zone person and unincorporated partnership, I'm repeating, free zone person by default qualifying free zone person. If they wanted to be taxable, they need to opt it. In the same way, unincorporated partnership, by default, partnership itself transparent, it will not be subject to tax. And if they wanted to be subject to tax, they need to opt it. They need to apply, then partnership will be subject to tax. Elections, as Faiza has already mentioned, some elections are irrevocable. And tax period, some cover this, the current tax period, one tax period, multiple tax period, and you need to look into what will be the impact of those elections on your taxable income. Like realization basis, you need to opt it one time, it will continue in the future as well. But you need to opt it in your first tax period. Transitional, this is a one time, and if a one time impact, you will not be required to do it again. You need to assess qualifying financial assets, qualifying financial liabilities, qualifying intellectual immovable property, qualifying intangible asset. What are these qualifying financial asset, financial liabilities, immovable property, intangible assets. These are the assets or liabilities that you are holding before the first tax period of your return. These are being maintained at the historical cost. And for the intangible assets specifically, the life should not be more than 10 years. You're holding them not more than 10 years. These are the basically qualifying financial assets. Then then you have an option that the gain that you earned before the start of the first tax period, you can eliminate it. This option has been given to you, but this is only one time exercise. You will not be required to do it again and again. Small business relief, this is annual exercise up to 31st December 2026. Might be they will give extension, might be they will not give extension. Just you need to look at this is annual election. Transfer within the qualifying group, again, this is ongoing. Once you are opting it, then you will keep continuing, it will be applicable in the future as well. Transaction by business restructuring relief, this is transaction by transaction relief. For each transaction, you need to opt it, because this is the transfer. This is something like this transfer as a going concern from one business is being business or entire one independent part of the business is being transferred from the one taxable person to the other taxable person. So they assume this is a transfer of going concern. It will not have any impact on the tax. So they have given this relief. Foreign permanent establishment, this is the annual relief. Tax computation, starting point, I don't know, we need to start it from the indirect method. We need to start with the accounting income. Then we need to make the adjustment. The reason is basically the requirement of the law is different from the requirement of the accounting standard. We have discussed this so many times. The bases are different, accounting standards are different, provisions of the law is different. So wherever there is a difference in between the provision of the law and the provision of the accounting standard, then we need to make the adjustment, because the profit and loss we are preparing by applying the IFRS. But tax return we are preparing by applying the provisions of the tax law. Once there is a difference in between these provisions requirement, then there may be adjustment. Like the depreciation has the same treatment as per accounting standards as per tax standard. We are not required to make any adjustment. So wherever we need to make the adjustment, we need to pass it, but we need to start it from the by applying the indirect method. We need to start it from the accounting net profits or net losses, and then we need to make the adjustment. After making adjustment, we need to arrive at the taxable income. Tax period, natural person, again, standard 1 year Gregorian calendar year. Other than a natural person, the tax period, initial tax period might be in between 6 to 18 months initial. But after this, you will be keep floating, your tax period will be 12 months. But initially, if you wanted to adjust it, you can make an adjustment. And once you are adjusting this, in the future, your future tax period of 1 year. But initially, as I mentioned, you can opt it, you can request the FTA, you can change your tax period, but it should not be changed. It should not be, the tax period should not be less than 6 months. It should not be more than 18 months. Schedules are already built into the FT Emara portal. So whenever you are filling this form, automatically schedule will be populated. Once you are putting the information into the schedules, return will be updated automatically. I'm not going through these schedules. You can go through this. I think she has already taken the screenshot as she has shared with you. This is a taxable person detail. It will be auto-populated. Field relevant to natural person. Natural persons, whenever you are putting the total income of the natural person, keep in mind you need to mention income from the sale proceeds of the assets as well. Whenever we are applying threshold for the minimum criteria, and we should not consider the income from the unincorporated partnership. Sorry, we should not consider the income from three categories, whether it is investment income, investment in the real estate, investment in the property, or salaried income. It will not be considered in the natural person. This is the important thing. Rest, this is not anything. Unincorporated partnership, they are liable to register as well, and unincorporated partnership will have the TRN. Just keep in mind. Business and business activity, all types of businesses. We know the definition of business. Any legal activity that you are doing on a regular basis to generate the profit, this is called business. Since time is limited, and I think we are already up to the time, just again, field relevant to juridical persons. They're asking for the information about the M&E group because we know this M&E group cannot enjoy small business relief. So this is the reason they're asking for information for the M&E group as well. Are you part of unincorporated partnership? Will it be subject to tax? Will it not be subject to tax? TRN, government and government controlled entity, we have already discussed. Business activity, they are very common questions. Country information is important. There is a possibility might be you have a double tax treaty with the respective country. If you have it, you are in double tax treaty, it will assess which income is subject to tax, which income is not subject to tax. Are you resident of UAE? Are you not resident of UAE? We need to look into the double tax treaty as well. While selecting the country, again, you need to be careful. You need to check what will be the impact of double tax treaty on your taxable income. You need to be aware of it. Foreign jurisdiction, poem, effectively control and manage. Here foreign tax credit will come. We need to look into the tax treaty as well. So they mention here double tax agreement. Non-resident person, PE of the non-resident person, only UAE income will be subject to tax. Are you meeting the requirement as I mentioned? The 6th requirement, just keep in mind. M&E group requirement, unincorporated partnership. Financial statement we have already discussed in detail. One or more business. Financial statement. Okay, taxable person. Okay. Elections, we have already discussed elections in detail. Bank and insurance provider, we know this that the banks and the insurance provider, the interest limitation rules are not applicable on the bank. These are not applicable on the insurance providers as well. This will be the important information because being a bank, being an insurance provider, you will be able to claim 100% interest. Otherwise, interest limitation rules will be applicable. This is very important questions. Moreover, out of these two, as I mentioned, banks and insurance provider, remember that is not only option B is available. This is available to the bank. This option is not available to the banks and insurance provider. Just keep in mind. Transitional provision, we have already discussed this. This thing qualifying intellect. Just keep in mind this qualifying immovable property provisions are applicable on each individual property. A property by property, these provisions are applicable, but on the qualifying intangible assets, qualifying financial assets and qualifying financial liability, these provisions are applicable on overall basis. All class of assets, all class of liabilities, these provisions are applicable. But for the property, these provisions will be applicable on property by property basis. Just keep in mind. Small business relief, I think we have already discussed so many times in detail. Assets and liabilities, election, PE, again, this is important. If you are opting this PE provision under the Article 24 of the law, you have an option that the income of the foreign PE and related expenses will not be considered for tax purposes, but it will be applicable on all foreign PEs. You cannot pick and choose that it will be applicable for your branch in UK and it will not be it will be applicable for your branch in case no. If you are opting this provision, it will be applicable on all branches across the all jurisdictions. Accounting standards are there: income statement, statement of comprehensive income, financial position, and audit. Audit we are discussed in detail. What is the requirement for the audit? Opinion. Okay. Accounting adjustment, exempt income. We need to make adjustment. While making the adjustment, we need to keep in mind apple to apple comparison. If we're eliminating any revenue, we need to eliminate the related expenses as well. We cannot say that we are eliminating the revenue, but expenses will be claiming. No, if you are not considering the revenue for tax purposes, you should not consider those expenses as deductible expenses in your return to arrive at your taxable profit. Apple to apple comparison. Equity method, Faiza has already discussed in detail. What is this method basically? This is basically dividend. Whenever you are applying equity method, might be considering the dividend as your income, accounting income, but this is not a taxable income. If you are considering further, this is important here. I just wanted to highlight dividend. If you are receiving from the resident juridical person, then dividend is exempt without any conditions. But if you are receiving a dividend other than resident juridical person or any foreign person like this, not which is not a resident juridical person, then this dividend is subject to participation exemption. From the resident juridical person, dividend is exempt without any condition. So if you are getting a dividend from the resident juridical person, it will be straightforward deducted to arrive your taxable income. But if you are getting this dividend from the for any person who is not a resident juridical person, this exemption will be subject to participation exemption conditions. We know that there are four conditions: 5% minimum tax, minimum holding 12 months, then the investment we have to make. There are 4 or 5 conditions. Just look into those conditions, please. Unincorporated partnership, important. If you are a partnership, again, I just wanted to highlight, if you are a partnership, unincorporated partnership might be the possibility this is a registered or unregistered. If this is a unregistered, it will be straightforward unincorporated. If this is a registered partnership, there is a possibility that any of your member has not even a unlimited liability. If any of the member has unlimited liability, even in the incorporated partnership, it will be treated like unincorporated partnership. But if any of the members are not even unlimited liability, means all of the members have limited liability, this is a limited liability partnership, then it will be treated like a juridical person, like it will be treated. I'm always, just for my remembrance, I'm keeping this LLP, limited liability partnership, is equal to LLC. You see, I'm just writing this for my how I'm remembering this basically. If this is a limited liability partnership, it will be treated like LLC, like a juridical person. It will not be considered transparent or unincorporated partnership. Again, this is very important. Might be there is any gain or loss which is being reported in the statement of comprehensive income, not into the profit and loss account. If any gain or loss is being reported in the statement of comprehensive income, it will not be reported again in the future, then we need to make the adjustment related to that gain or loss as well, because this gain, this loss will not be reported anywhere in the future in the financial statement. This will be reporting in the current tax period. And if this is a gain or this is a loss, then we need to look into this. Are we applying the realization basis, unrealization basis? What is the status of the gain, that the realized gain, unrealized gain? We need to make the adjustment in our tax in accounting income as well to arrive at the taxable income. Realization adjustment is applicable for all businesses. This is very common. We have already spoken so many times. Transitional rules, spoken so many times. I think it's everybody is clear regarding this. Just make sure while applying this, your assets are being maintained at the historical cost. These are qualifying assets. This is, you can see for the transitional rule, they are using the word qualifying. Qualifying means these existed before the introduction of the law. These are being maintained at the historical cost. So if these are qualifying, then only you can apply. If these assets are being maintained not at the historical cost, then you cannot apply these provisions for the assets or liabilities. And as I mentioned, property, each property individually, other than the property, it will be a class of assets or class of liabilities. Exempt income, we need to remove apple to apple comparison. We need to remove the related expenses as well. They mentioned participation basically. Just look into this, please. Foreign PE, as I mentioned earlier, for the foreign PE, it will be applicable on all branches. You cannot pick and choose. Yeah, this is over from our side today. And from in our coming webinar, we'll be discussing relief and onwards. And if you have any specific question, you are most welcome. Few questions are here, and Okay, what is the, for example, there are 10 entities preparing consolidated financial statement and getting it audited on annual basis. However, out of these 10, two are tax groups are formed having 5 members under each group. As we're supposed to prepare finance special purpose financial statement for the two tax group and get them audited for the each tax group. Yes. Individual entity financial statement, you need to have two groups, and each group you need to have the audited financial statement. Again, you need to look into this, are you crossing the threshold of 50 million or not? If you are crossing the threshold of 50 million, then audit is compulsory. If overall group is not crossing the threshold of 50 million, then audit is not compulsory. What about interest costs from overseas head office charged to the branch in UAE? What about interest cost from overseas head office charged to branch office in the UAE? Okay, if you are taken a loan from your corporate office which is out of the UAE, and that on that loan corporate office is charging the interest on arm length principles, this interest will become your cost. And then you need to look, are you a bank? Are you a insurance company? No, if you're not bank, if you're not an insurance company, if you're not a natural person, other than these three, then interest limitation rules will be applicable unless and until you have taken the interest after, I think this is 9th of December 2023. Before that, if you are taken a loan, I think we need to double check this. I think this is 9th of December. If you are taken a loan before that date, and there are no changes in the terms and condition of the loan, then this loan will be 100% interest will be allowed. But if you are taken a loan after that date, this is not related to those three entities as I discussed. This is not related to qualifying infrastructure project. And if you are subject to interest limitation rule, then you need to apply it. Income earned. Income interest will be netted out. Interest limitation rules are applicable on net income. Interest limitation rules are not applicable on separate income or expense, but we need to net it out. Interest limitation rules will be applicable. Few more questions were there, and Faiza, she has already addressed those questions by writing their replies. I believe this is fine for everyone. If you have any question, as I mentioned earlier, you can just drop us an email. You can give us a call or call as well. We are always there to help you. And once again, thank you very much for being with us, and have a lovely evening. Thank you very much. Thank you.
Thank you, everyone.
Thank you, Faiza. Thank you. Take care. Thank you. Bye bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.